Welcome to TheoTrade. This is Don Kaufman. Here we are, June 7th, 2017. Well, if you tune in just at the end of a trading day, or you just kind of tune in late in the evening, all you would see is that, for example, once again, the Nasdaq is higher, right? No surprise over there. However, in the last several days of trade, there are signs of price instability inside of the Nasdaq specifically. And once again today, there's ultimately more than that. Yes, the Nasdaq is higher here. We've got about 7 minutes left in the trading day. But when I say pricing instability, in fact, you're seeing it on my screen live right now. This is what I mean by pricing instability. But I'm going to show you something quite interesting over here. First and foremost, if you look at the range from the high, today we actually traded all the way to 58.85, all the way down to 58.45. I mean, you're looking at 40-point Nasdaq range inside of today's trading session. But allow me to show you something also a bit interesting. Now, I'm not much of a market technician, but I do recognize heavy price action when I see it. And again, what I would term instability, I can't necessarily call it volatility per se at this point. But what you're looking at right now happens to be a 30-day 1-hour chart. And there are times as traders, zoom out a little bit, but the one thing that really resonates with me, now we had one little blip of volatility. And by the way, again, on a 30-day 1-hour chart, all of this price action right here, okay, right there, that all ultimately happened inside of one day. And what did we do? We've been rallying consistently out of it, okay, migrating sideways, rallying out of it. However, in the most recent few days of trade, we're seeing actually fast and a little bit disturbing levels that are being hit both to the upside and to the downside. And again, this is something we should start to pay attention to in the Nasdaq is, another possibility of sellers coming in over here. Well, there's no doubt. And again, we'll just back up over the last 4 days and I'll back out to like a 10 to 15 minute over here. And you can see how fast and how sharp some of the moves have actually been. And again, this is just the last few days of trade over here. Are we rallying? Well, this is going back even to last week. Absolutely. After a steep decline, we exploded higher. Here's another explosion higher. Again, we're getting some fairly wild trade, though, on an intraday basis. Now, any way you want to put this, if you're an intraday trader, you have to love, to a degree, that price action has returned. This is a two-sided market. Like, people, this is what you want to see. If you trade on an intraday basis, it's not a one-way ticket to the upside over there, which is extremely difficult. And this is interesting because we have about 4 minutes to go to the close, and there's increased volume here in the Nasdaq, and there's some sell-side activity ultimately going on. Now, I'm going to back away from some of the price discussion in terms of the Nasdaq, and I want to remind everybody that we're on the eve here of what could be some risk events tomorrow. By the way, again, speaking of price action, it's getting a little crazier out there. Again, we're looking at 5-6 point moves in the Nasdaq. This is right now set to a 1 minute chart. So apparently the Nasdaq can't shut down quick enough right now because there's a little bit of sell side activity here into the close. So as I was saying, again, we're on the eve of kind of a risk event. And so what's the risk event? Number one, and you can check out the calendar on this one over here. Number one, in terms of the risk event tomorrow, everybody's talking about the ECB. Now, we don't expect much out of the ECB. That's the European Central Bank. It's ultimately the European version of the Fed. They're going to talk about, possibly easing up on their bond buying, whether people are aware of it or not. But the ECB is not only have, uncanny low interest rates, but they're also still out there buying corporate bonds, which is buying corporate bonds. What is buying corporate debt? That's one step away from just blindly buying any stock that's on a marketplace, right? But there could be some discussion tomorrow of Mario Draghi and the ECB backing away from that. So that creates a little bit of risk. number 2 on the docket tomorrow, and this is not telling you which is bigger risk than the other, but number 2 on the docket tomorrow is obviously the Senate testimony from the former FBI, chairman out there, and no one knows exactly what to make of that just yet. Again, I've talked to a lot of traders. There's conventional wisdom says nothing is probably going to come out of it, and the SPX tends to agree. So yeah, I like to really block out all the media in events like this. Why? Because I think, don't speak with the mouth. Let the implied volatility do the talking for you. And what that basically means is people don't vote, with their hands in the market, right? They vote by actually buying and selling, and supply and demand right now. And this is through Friday's close. Again, through Friday's close, happens to only price about a $15 move, which is not like wildly extraordinary. However, we have seen this volatility come up just a little bit in the last day of trade. So just be on the lookout for a little increased volatility. Last but not least, there is the British elections. Funny enough, there happened to be a Bloomberg article about the British elections, and they're calling it the election much about nothing. So once again, I don't think that those are too large of risk events. So the big event to me is the uncertainty in the ECB, because that really is behind closed doors. No one has any idea really what to expect on that particular front. Again, in the last minute of trade over here, lots of price action inside of the S&Ps, lots of price action inside of the Nasdaq. Okay, now, going back to something I talked about the other day. So the SPX, all right, generally flat today. The risk doesn't look too crazy in the next couple of days. What I talked about the other day, the marketplace is effectively, it's no longer about what we think. It's no longer about, for instance, valuation. And this is a pretty strong, argument and hypothesis that I've had for quite some time. Today's marketplace is more about quantitative trading. And what that has a big, portion to do with, you see a lot of trade being impacted by news. When you think about this, why are the tech companies rallying? All right. Are they the buy of a lifetime? Or is it quantitative firms simply shoving capital? There's the closing bell. Or is it quantitative firms simply shoving capital towards the Nasdaq simply to hedge and reduce risk of other positions they have on? And I want to show you in today's marketplace how so much quantitative trading has really gripped hold. And what that means is a lot of algorithms that are doing these trades. Okay, I think a prime example in the last few days of trade, if you have not looked at oil, you really have to kind of shake your head at this one. Forget about the fact that oil sold off, and today was another 5% decline. Again, a 5% decline in oil here, and most of that happened to be off of the oil inventory report, which, again, was news that is effectively traded by algorithms out there, drops it down. But the one point that a lot of traders have been discussing in the last few days is there's some turmoil in the Middle East. And oil has done the exact opposite of what any trader had expected in this particular case. In addition to it, all right, natural gas, and for those of you that do look at natural gas, once again, has really done nothing but sell off. And I mentioned natural gas because ultimately in the Middle East, where some of the turmoil is, the largest, producer of natural gas over here, there's more and more evidence on a day-to-day basis, that you have to realize, the S&Ps, whether it's oil, whether it's gold, right, we're driving, but there's ultimately no one at the wheel. When you're watching stocks like Google ascend to the upside over here, this is not mom and pop in a 401k that are going out there and deciding that Google is a great bet at $1,000, or that Amazon is a great bet. Oh, we love Jeff Bezos so much, we want to buy him at 1,000. This, becomes quantitative trading. This is a form of arbitrage. And the markets are actually getting shoved higher because the momentum of the market is to the upside. And as the markets continue to the upside, these firms are forced to go out in an arbitrage stance and actually buy up Amazon. And the easiest way to describe it is if you buy a Nasdaq future and the Nasdaq future starts to rise, then another firm has to come out here and they have to buy Google and Amazon and Apple and Facebook. Why? Because they have to keep these products in relative alignment with what the Nasdaq future are doing. Otherwise, that's an inefficiency. So some interesting things to think about in today's marketplace, because again, you realize that the market is really driving forward right now and moving at almost light speed, and yet nobody's watching where we're headed over here. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.